In a move that sent shockwaves through the global economy, President Trump announced 145% tariffs on Chinese imports. Dubbed the Liberation Day tariffs, this was to force China's hand in trade negotiations. Trump aimed to compel Beijing to concede to his demands. However, this gamble underestimated China's resilience. China's response to Trump's tariff offensive was swift and multifaceted, demonstrating a calculated strategy to weather the storm and push back against American pressure. Instead of bowing to U.S. demands, Beijing retaliated in kind, imposing its own tariffs on a range of American goods. These counter-tariffs, strategically targeting key sectors of the U.S. economy, were designed to inflict reciprocal pain and undermine support for Trump's trade war. Recognizing that a protracted trade war could have damaging consequences, China also embarked on a shrewd diplomatic offensive. President Xi Jinping embarked on a series of high-profile visits to Southeast Asian nations, strengthening economic and strategic ties with countries like Vietnam, Cambodia, and Malaysia. Concurrently, senior Chinese officials engaged in a flurry of diplomatic activity, reaching out to European Union counterparts and even exploring areas of cooperation with Canada. The message was clear: China was not isolated in its opposition to Trump's trade policies. By framing the U.S. as a bully and offering alternative partnerships, Beijing sought to undermine American influence and build a coalition of nations wary of Washington's unilateral approach to trade. The escalating trade war between the world's two largest economies sent shockwaves through the global trading system, raising fears of a global recession. The International Monetary Fund, IMF, issued a stark warning, highlighting the significant risks to global economic stability posed by the ongoing trade dispute. The IMF's projections painted a bleak picture, with global growth forecasts revised downwards and the specter of a synchronized global slowdown looming large. Financial markets reacted nervously to the escalating trade tensions. Stock markets around the world experienced heightened volatility, with investors spooked by the uncertainty surrounding the trade war and its potential impact on corporate profits. The U.S. stock market, long considered a barometer of global economic confidence, experienced a series of sharp declines, reflecting growing concerns about the trade war's impact on American businesses and consumers. The trade war's impact extended beyond the financial markets, casting a shadow over the global economic outlook. Businesses facing increased costs due to tariffs and supply chain disruptions grew increasingly cautious about investment and hiring. Consumers, grappling with rising prices and economic uncertainty, tightened their belts, further dampening economic activity.
7, 6, 5, 4, 3, 2, 1.
As the trade war dragged on, the path to a resolution remained elusive. Publicly, both sides maintained a defiant stance, with Trump insisting that China must make significant concessions and Beijing refusing to negotiate under duress. Behind the scenes, however, there were hints of a potential thaw. Reports emerged of back-channel communications between representatives of both governments, suggesting a willingness to explore avenues for dialogue. Some analysts believe that the economic pain inflicted by the trade war, coupled with growing domestic pressure, could compel both sides to seek a face-saving compromise. Others remain skeptical, arguing that the deep mistrust and fundamental differences in economic philosophy between the two countries will continue to impede progress towards a meaningful agreement. The outcome of the trade war remains uncertain. What is clear, however, is that the stakes are high. The global economy hangs in the balance, and the decisions made by Washington and Beijing in the coming months will have far-reaching consequences.